Hey everyone, my name's Andy. My channel's Finding Value. If you like making money, subscribe to the channel. I talk a lot about commodities and undervalued sectors that are out there in the world that we could potentially be investing in. If you like this content, give me a thumbs up and leave any comments or questions below on anything that you guys have. Since we're looking at commodities, a lot of these commodity companies have put in very large bottoms. They are starting to break very large chart patterns. So we're not looking necessarily for bottoming patterns anymore. We're looking for continuation patterns. We're looking for pullbacks. We're looking for things that we can, quote, buy the dip. So this presentation is called Buying the Dip. And I'm going to show you what I look for when looking at companies and potentially buying, quote, buying the dip. So bull markets, we're seeing bottoming patterns in the commodities sectors. We have great valuations still. We are seeing prices for each commodities put in bottoms and breaking large chart patterns. So that's good. We are coming out of these large basing patterns. The structure is supporting prices from a market balance perspective. And what I mean by structure, it means the underlying fundamentals of these commodities are supporting higher prices. We have market deficits in the future where the supply cannot meet the demand, and it's going to be resolved through higher prices. The momentum is also to the upside as we're breaking all of these large chart patterns, which is good and supports us buying into strength. So in the bull markets, when things align, what I call it is you buy the dips. What does this exactly mean? When you see support for the stock after a pullback or when they're about to break large chart patterns, that's when I start to accumulate on the pullback. And I'm going to show you what those look like through charts. You can be buying on a downtrend for a while. Sometimes it works, sometimes it doesn't work on the short-term basis. I've been buying Impact Silver, Ely Gold, Wheaton Precious Metals. I've been buying some of these, etc. on this large pullback. And so far, we are still in the, we're still pulling back, and they haven't panned out yet. On a medium to long term, I think they will. On the short term, they have gone lower on me. No one is going to be perfect, and no one is going to time these things perfectly. We can try our best, but sometimes you get caught in the downtrend still. So I'm going to show you where I've been accumulating some of these companies, where I accumulated them. So Teuton Resources, I didn't know of Teuton Resources back in 2018. Even 2019, I didn't know about it. So you can see that we had this downtrend. It broke to the upside. And what happened is it had a massive sell-off, and it created this other large chart pattern over, I would say this is August, almost a little bit over a year. This thing went sideways. And I saw this chart pattern develop, so I loaded the heck up right here in this 50-cent range where my circle is. So when looking at these patterns, everybody wants to experience this big move up right here. They don't want to experience this sideways chopping action. And what I've been doing is I'm just accumulating these and holding it for the entire bull market. And I think we're going to obviously see these things continuing to move up to the upside for a very long time period. It could be for 10 years. So I'm positioning in these companies as cheap as I can get, and then I'm just holding on. But I positioned here at the top of this pattern, and I positioned here at the bottom middle tip of this pennant formation here. So I bought here and I bought here. This is Teuton Resources. So you can see these big flagpole patterns here as they went up. We broke to the upside here, and we're kind of just meandering sideways, moving on up. But when gold takes off, this will take off, I think. So that's where I bought it. These are the dips, quote, where I purchased. We're looking at Encore Energy here. I bought down here. Yeah, I think it was somewhere in here. Before this breakout, I bought. It came back up, hit this trend pattern here. At the time, we didn't know that it was a trend pattern. It came back. This I did see. You can see this downtrend line about to break, and that's where I bought it. It broke out, back tested, and then moved higher. So this is looking pretty good. But those are the two spots that I purchased somewhere in this range. Like I think it was right in here, and somewhere underneath here maybe. So that's where I purchased. Looking at Ely Gold, I bought this one a couple times. I think I found out about it beginning of 2020 somewhere. I bought it here. I bought it here before this breakout. Broke out, came back. I saw strength, like thinking it was going to break through this downtrend line. So I bought here. This was a higher low. I bought there, and then I bought the breakout, and then it reversed on me. And then I bought it again right here, and now it's still coming back. So that's where I've purchased Ely Gold. I would even be looking at it here on this breakout, but I ran out of money. So that's what that one looks like. This is SM Energy. You could see that combining a couple things, this is a higher low right here than this low. We had a downtrend line. I was buying the heck right in this area and here. It broke out. And then we have a kind of, this is the shoulder head shoulder pattern. And it came right here about $4. It broke out, it back tested, and I bought right at this back test at $4. And then I haven't purchased since, even though it's way up here. It did break out of this downtrend line as well. That would have been another good spot to maybe buy. But I haven't bought anything yet outside of these two large purchasing areas that I did. Centennial Development Resources was the same thing. I saw SM Energy go. I was looking for other companies. I got this one on the back test of $1. Centennial Development. It broke out of its other large downtrend pattern, and I bought again in this pattern here. And then we're moving on up. Those are the two spots that I purchased, unquote, buying the dip. You actually have another dip here too. You can see symmetry. This thing kind of pulled back. This thing's pulling back right here. And it could be creating what is another cup and handle pattern here. It's probably putting another handle there, which is going to break this. And if that breaks, you go from the bottom here. It's going to be way up here. I don't even know if it's on a logarithmic scale. It could be $20. So it's looking fantastic here to putting in another handle. So this is going to be one gigantic cup and handle pattern. So buying the dips, I buy dips into strength. Small pullbacks that occur in uptrends are what is considered a dip. I buy it close to bottoms of the dip, as close as I can, knowing what I know. I'm waiting now for a pullback to add some more money in. Let's hope we get one on some of the companies that I'm looking at. Actually, Centennial Development looked very good right here. That looks good right now. If you guys like Centennial Development, that's an oil company. It's a higher debt, higher leveraged company. And right here looks pretty good because it looks like you're at the bottom of the cup formation almost. Somewhere in this range down here. Let me see. I'm waiting now for a pull. Yeah. I view these companies as some of the best opportunities I've ever seen in the world, and I want more of them. That's from a valuation perspective. And what I'm looking at is I'm looking at the ratios. That's the value. I'm looking at market conditions and market balances of the commodity. And the market balances of some of these are out of whack, especially uranium. The market conditions in terms of inflation, in terms of real estate, and what drives inflation looks absolutely fantastic to be an inflationary environment, which is great for commodities. And then the ratios, it's 60 pounds to 1 ounce gold, which is a very, very, it's an anomaly in history of how cheap uranium is. And the pullback, if we get a large pullback here, it's probably because of sectors being sold. And remember, selling begets more selling or margin calls. I suspect if technology sells off, we get an overall market dip, and perhaps it doesn't sell off. The dip is not related at all to the fundamentals of commodities and the companies themselves. This is key to understanding ratios and market conditions. So since it's not related to the fundamentals, I'm going to buy the dip. And trading in and out, just to give you guys my opinion on this, lots of things can happen which charting will not catch. Just for an example, if the uranium contract shoots the price higher, I don't want to try and time anything in the uranium sector. I can try to time adding positions, but I'm keeping all my positions in the sector that I have. I'm not trading in and out. We have an anomaly here in valuations, and the potential upside is massive. So I am not going to be trading in and out. The charts some of them look pretty good for Centennial Development, but that's an oil company. But uranium, I'm in it. I'm looking for some more to pull back, and I just want to add a little bit more. Some of them were putting in pretty good candlesticks, like signaling that they may be putting in a little bit of a bottom. So we'll see. We'll see what I do here. I'm going to continue to watch it. I'll buy into strength, and maybe we get another push here in the next week or two. So I'm going to be watching for it. I'm going to be looking for some of these companies to purchase, and I think some of them look pretty good. So we'll see what happens. If you guys like this content, give me a thumbs up, and don't forget, I'll be buying the dips. Thanks for listening. This is Finding Value.